Today we are in the midst of a technological revolution that is fundamentally changing our world, reshaping how we communicate, access information, and purchase goods and services. As the central bank of the United States, the Federal Reserve is charged with promoting monetary and financial stability and the safety and efficiency of the payment system. In pursuit of these core functions, we have been carefully monitoring and adapting to the technological innovations now transforming the world of payments, finance, and banking.
Hello guys, welcome to another episode of the New Economy Tech, the show where we bring you digital asset news, cryptocurrency, robotics, and a lot more. Today I've got a very special episode planned out for all of you guys, looking at crypto regulation, and also giving you an insight into the key players into the whole blockchain and digital asset ecosystem. To start off with, as usual, we're going to go through the current trends and news around cryptocurrency, any other information that I can put on and put you guys onto. To start off with, it's been about 6 months or so since my last video, and in my last video I did make a note that I was expecting the market to start declining due to certain reasons actually. One was the Fed cutting back in terms of their asset purchase, and also they were rolling off their balance sheet whilst also increasing interest rate. So I actually took another step back from the whole crypto ecosystem so I can observe it, see how the Fed's action impacts the actual economy as well as the digital economy itself. And as you can see, I was expecting the market to be on a decline. So in the past 4 to 5 months, it has dropped significantly low. And if you can see here, what I've actually done, because I look at it from a long-term perspective, so I've actually look at the differences between a 90 days change, 30 days, and also year to date. So currently Bitcoin is around $23,000. I think at one point it did drop below $20,000, and Ether is around $1,800 itself. So if you can look at 90 days out from today's date, and today's date is the 8th of August 2022, Bitcoin has fell 22%. But if you look at year to date, it's actually 50% drop from the same time last year. How I look at it, because I take my cryptocurrency and understanding this space from a long-term perspective. So if I was to actually start purchasing Bitcoin today, I would actually buying it at a 50% market value. Basically compared to a year ago, if I was to purchase Bitcoin this same day a year ago. So basically by purchasing today, I'll be getting a 50% discount basically on any Bitcoin that I purchase. So that's how you have to look at it. I look at it from a long-term perspective, and look at where things are within a 30-day, 90 days, and a year to date. That really tells me the direction the market is going. A lot of these tokens are actually on a discount currently. Yeah, just have a look through it and then you can see for yourself. And then another thing I want to bring your attention to is, you've been hearing a lot about crypto regulation and what does that mean. So I came across this article that says crypto mixing service tornadocash blacklisted by US Treasury. So what you're actually seeing is the start of crypto regulation really slowly creeping in. And this is something that's been ongoing for a long time. If you've actually been doing your research, observing the market and trying to make sense of it. So you can see within last year and this year especially, there's been a lot of talk around crypto regulation. And this video today is actually very special because it ties in to regulation and how that's going to impact things in the future. But before that, this video is going to be about understanding one of the key players that is going to bring in crypto regulation, and that is a gentleman by the name of Gensler. So in this video, I've tried my best to put together a video that will actually explain to you who he is, where he was from and what he's currently doing, to give you a broader understanding of what's actually taking place behind the scene. So Gary Gensler, he was a professor for MIT. I did a little bit of digging, also done a lot of work for commercial banks in terms of his career path. But yeah, so currently he is the chairman of the Securities and Exchange Commission for the USA. So he's basically the one in charge of determining what is considered a security or commodity, and what should be regulated. So a very important person for you to be paying attention to, because his action, his decision definitely impacts the future of cryptocurrency, the future of finance itself, and also the future of digital assets, and how that's going to be regulated and linked to things like robotics and stuff like that. So I hope you guys enjoy the video. That's enough of me talking. Enjoy the video, and if you do like what it is that you're seeing, please share it with someone else that needs to know the knowledge and understand the direction the world is moving in. Thank you, and God bless.
Welcome. Welcome. If you have a desire to learn a little bit about blockchain and its intersection with the world of finance and money, and you're looking for 15.S12, you're in the right place. If you're here to not do that and just hang out and have a good time, I guess you still hopefully are in the right place, because we're going to have a good time this semester. My name is Gary Gensler. I'm a senior lecturer here at MIT Sloan. I'm also an advisor over at the MIT Media Lab. And I've spent a lifetime around the world of finance and money and public policy. And I've been at MIT this last 8 months. And we're going to learn a lot together about blockchain and money. We're going to have a little bit of fun here and see what we're going to do. So we're talking about blockchain and money. That's where we are. So now I'm going to talk a little bit about cryptography. We're going to spend a lot of time on cryptography. It's cryptocurrencies and the like, that way. But idea.
Yeah. It's the technology or the science behind encryption and decryption codification. So how do you encrypt a particular text such that it's not readable by someone else without having the decryption code?
Okay, so it's how do you encrypt something so it's not detectable by others? Or in essence, it's communications in the presence of adversaries. You have an adversary who wants the communication, you want to communicate and not let your adversaries know that communication. And this is true for ancient times. So in ancient times, there was something called the cipher. And this was a way that you take a piece of leather or a piece of cloth and have a lot of letters. And both sides, you'd encrypt and decrypt because there were different measurements of the cylinder. Has anybody seen the movie Imitation Games? All right. The Enigma machine. Now, the movie was wonderful because it said Turing cracked it, and he did help crack it in an automated way, but actually the Polish government had cracked it in the 1930s before they fell to the Germans. And Turing built on all of that and cracked it further. And then in the 1970s, and this was here at MIT to some extent, there's private key, public key cryptography, which I'm not going to dive into today, but it's the heart of Bitcoin and blockchain. It's at the heart of the internet. But it's about, the key thing is communications in the presence of adversaries. How do you keep a secret when everybody wants in and get that information? And there's a long history, and MIT's at the center of a lot of that. A lot of early cryptography failed on the internet. In the early 90s and late 80s, David Chaum and others tried to do things, and we're not going to debate these today, but you'll have one reading, I think it's either next week, which will give you that history, and it's worthwhile knowing about the history of failure. But cryptography is the reason why the internet works today. Does anybody want to tell me what SSL and TLS is? Do we have any computer scientists? Remind me your first name. Eric.
That's the protocol that mounts on top of the TCP/IP stack to provide encryption using asymmetric keys, which is public key infrastructure cryptography that secures socket layers, transferable
Right. So it basically uses asymmetric cryptography, which we're going to talk about 2 lectures from now, but it secures the whole internet. So all of a sudden you could deliver the pizza and get a passcode. And I have to tell you, I never knew how this worked before I was at MIT. So PayPal came along in 1998. I mentioned this, a whole bunch of other digital currencies then failed. But some of these people who we'll read later, like we'll read Nick Szabo's piece on smart contracts later, Adam Back, who created Hashcash, some of these innovations were what Satoshi Nakamoto later used.
Can you explain your view of whether Ethereum is a security or not? I think you've actually suggested it isn't, but then why you believe that Ripple is a security. And I know there's an ongoing lawsuit related to Ripple, but could you speak to the Ethereum issue?
Andrew, just to have a little fun with you, refer back to my earlier question. I'm not going to speak to any one matter. And so your listeners understand it. I'm the chair of a 5-member commission that's also a civil law enforcement agency. And so we don't get involved in these types of public forums talking about any one project, one possible circumstance, and give legal advice over the airways that way. But again, let me talk about more generically the overall market. If you're raising money from the public, and the public is an anticipation of profit based upon that promoter, sponsor, that group's efforts, that's within the securities laws. And it's within the securities laws because Congress painted with a broad brush. They wanted to protect you, the investing public, so that you have proper information, or what's called full and fair information, and protect you against fraud and scammers and the like. It's a simple, basic idea. You get to decide whether you want to invest in this security or that security. And if they call themselves a token, they're still probably, possibly a security. You get to decide, but there needs to be some basic disclosures and protection against lies and frauds.
Chair Gensler, this sounds like a pretty important distinction and maybe a new way of thinking of these markets. This is kind of a new broad framework that would open the way for the SEC to maybe have a lot more say over a lot of arenas. And you start thinking about all the different ways investors, I mean, I'm just going back a year to where we were a year ago at this point. It was SPACs that were the huge rage that everybody was kind of interested in, and the new way of taking a company public through these acquisition vehicles. And what you're talking about is making sure that you are looking at broad protections because there are so many retail investors that are maybe investing in a different way than they had in the past. Is that kind of what we're listening to here? This sounds like a fairly important statement.
It is important. Part of it's new and part of it's old. It's like that old saying about when one gets married. So the new part is the new technology, whether it's crypto tokens, whether it's special purpose acquisition companies or SPACs. These are something new. There are new ways to trade on the markets through brokerage apps and robo-advisors and like. That's what's new. But what's kind of old and really important is this basic idea that if you raise money from the public and the public's thinking about a profit, you've got to give them basic disclosures and everything. And that goes back to the 1930s. It goes back to when the Supreme Court defined this test in 1946. That's the important public policy thing that we should not be neutral to. And then the technologies come along and they promote innovation, whether it's crypto, whether it's a new form of doing initial public offerings through these SPACs. That's exciting. Our role at the SEC is to ensure that you, the public, still gets the basic protections.
If I'm the industry, though, I hear that as you guys are laying the groundwork for getting involved in a lot of areas that you maybe hadn't been necessarily closely involved in the past. This is the justification for why you are going to be overseeing all of these different arenas. Is that an unfair
Becky,
assessment?
I beg to just differ with that description.
Yeah.
The SEC has been involved in these arenas since the 1930s. It's been updated. Our laws have been updated often, and staying within that framework, those public policy frameworks of the public gets to decide, but we try to have basic disclosures and protect the public. New technologies come along, and sometimes industry is trying to find what they might think ways around these basic protections. They might be finding ways to, quote, arbitrage the system.